All right, let's jump right into this explainer. We're unpacking how a radically shifting workforce is completely rewriting the playbook for one of the world's biggest online learning platforms. We're talking Coursera's Q1 2026 earnings, a massive impending merger, and a fundamental shift in how the world views education and artificial intelligence. To really grasp the scale we're dealing with right out of the gate, you just have to look at this number, 205 million. That is the record number of registered learners Coursera hit by the end of this first quarter. To put that momentum into perspective, they pulled in 7.6 million new users in those 3 months alone. It's an absolutely astronomical user base, giving them this unprecedented real-time look into global learning habits. So what's actually fueling this growth? Well, it brings us to our first major theme, the global skills shift. The World Economic Forum projects that 39% of current workplace skills are going to completely change by the year 2030. Just think about that for a second. Essentially, 4 out of every 10 skills you rely on today could be obsolete or just drastically different in a few short years. And it's largely being driven by digital transformation and automation. And this stat right here brilliantly illustrates the tension happening on the corporate side. 63% of employers are saying skills gaps are their main barrier to transformation. Basically, employers desperately want to evolve for the digital age, but they literally hit a wall because they can't find the skilled talent to make it happen. The people just aren't there. So how is Coursera actually capitalizing on that massive gap? Let's take a look at their Q1 2026 financial snapshot. Looking at the top line, revenue is showing clear, steady momentum. They hit roughly $196 million for the quarter. That's a really solid 9% year-over-year growth compared to the $179.3 million they brought in during the exact same period back in 2025. But when we break that down a bit further, you can see exactly where that cash is coming from. The consumer segment is the absolute engine here, bringing in $129.5 million. That marks its 4th consecutive quarter of double-digit growth at 10%. Meanwhile, the enterprise side, selling directly to businesses and governments, that grew too, hitting $66.2 million, which is up 7% year over year. Now, as impartial observers, we've got to point out the underlying tension in these financials. On one hand, greater efficiency drove their non-GAAP gross profit margins to a 3-year high of 57%, which is great. But their bottom line net loss actually widened, going from a $7.8 million loss a year ago to a $20.5 million loss this quarter. Now, it's worth noting, this widened loss was significantly impacted by over $11 million in one-time transaction costs, and those costs are tied directly to upcoming mergers and acquisitions. Which leads us perfectly into our next chapter, the Udemy mega merger. This is exactly how they plan to get the sheer scale required to offset those losses. Approved by stockholders in April 2026, Coursera is aggressively advancing an all-stock mega merger with one of their biggest rivals, Udemy. This isn't just a partnership. It's a massive move to combine their forces, their content libraries, and those huge user bases into one absolute juggernaut of online education. The financial logic here is all about aggressive consolidation. By bringing these two platforms together, management expects to realize a staggering $115 million in ongoing annual cost synergies within 24 months of closing the deal. And the kicker? The vast majority of those savings are expected to hit the bottom line in just the first year. It is a textbook play for pure scale and efficiency. But it's not just about cutting costs. Listen to this quote from Coursera's CEO, Greg Hart. He says, they see a significant opportunity to build a platform designed for the AI era. That perfectly bridges the gap here. They aren't just merging to trim the fat. They're merging to absolutely dominate the AI education space. And that brings us to navigating that AI era and how Coursera is reshaping what and how we learn. They are pushing some major innovations for 2026. A huge one is their fast-growing agentic AI skill tracks. If you're not familiar, agentic AI refers to systems that don't just chat, they actually take actions on your behalf. They've also deepened their partnership with OpenAI, even launching a ChatGPT fundamentals course specifically for K-12 educators. Plus, on the defensive side, they're deploying AI-based proctoring to eliminate plagiarism and keep the platform's integrity rock solid. And why does this matter directly to you? Well, according to LinkedIn data, AI proficiency is now the single most sought-after skill globally. We are seeing a massive boom in roles like AI integrators and data center technicians, literally jobs that did not exist a few years ago. AI tools are no longer some peripheral novelty. They are the absolute core of job security. Because technology is moving this fast, we are witnessing a fundamental market shift. Employers are increasingly prioritizing demonstratable, verified micro-credentials, those short-form, highly specific skill certificates, over just traditional multi-year academic degrees. And that AI proctoring we just talked about, that's what validates these micro-credentials and makes them a trusted currency in today's job market. So, with all this industry consolidation and AI growth, what's the payoff for investors? Let's look at the $500 million buyback strategy. The real climax of this quarter's financial update is the board authorizing a massive $500 million share repurchase program. They are buying back $500 million of their own stock from the open market. Now, you might be thinking, wait, how can a company operating at a $20.5 million quarterly net loss just afford to buy back $500 million in stock? Well, take a look at the balance sheet. Coursera is sitting on a war chest of nearly $790 million in cash and cash equivalents, and they carry exactly zero debt. So they're funding this entirely through existing cash reserves and anticipated future operating cash flows. The real takeaway here is the signaling. Management is clearly using the anticipated post-merger scale and that $115 million in expected synergies from Udemy as the justification to return major capital to shareholders right now. It's a massive vote of confidence from the board that this consolidation and their AI strategy are going to pay off tremendously. So as we wrap up this explainer, I'll leave you with this question to chew on. As artificial intelligence fundamentally reshapes the skills required for almost every single job on Earth, will Coursera's massive consolidation play, combined with their pivot toward verified AI micro-credentials, make them the undisputed classroom of the future? Only time will tell, but the scale of their ambition is absolutely undeniable. Thanks for tuning in and keep learning.